Hey there, good morning everyone, and welcome back to another episode of Capital Markets Quickie. It's Thursday morning, November 16th, and we're going to take a quick look at what happened in the stock market yesterday. I'm your host, Endrit Sella, and let's dive right in. So, Wall Street had a bit of a mixed day on Wednesday, but there were definitely some interesting movements. The Dow Jones Industrial Average was leading the pack, rising about 0.5%. The Standard & Poor's 500 wasn't far behind, with a modest gain of about 0.3%. And the Nasdaq? Well, it popped up about 0.2%. Now, what's fueling these gains? It looks like investors are really latching onto this idea that inflation is cooling off faster than expected. This is making a lot of folks think that the Federal Reserve might just hit the pause button on interest rate hikes. And hey, we might even see some rate cuts early next year. Here's something that caught my eye. The data released on Wednesday showed that October's wholesale prices had the largest monthly decline in over 2 years. That's pretty significant, and honestly, I think that pace might be a little too quick. Alright, let's talk about October's retail sales report, which also came out yesterday. Well, it revealed the first monthly decline in sales since way back in March. It was only a 0.1% drop, which was actually better than what Wall Street was expecting. And, of course, we've got to talk about Target, the store in America. Well, their shares surged more than 16% after they announced their third quarter earnings. They really knocked it out of the park, beating estimates by a wide margin. Target's results seem to be pointing to the resilience of the U.S. consumer even with higher borrowing costs looming over us. Well, that's a wrap for today's quick rundown of the stock market action. Remember, the market is always moving, and I'll be here to keep you updated. Thanks for listening to Capital Markets Quickie, and don't forget to tune in tomorrow for more insights. This is Endrit Sella signing off.